All right. I will be talking to you guys on liquidity concept today. Let me type it out. Liquidity concept. All right. It's a very simple logical topic or liquidity concept. We define it with the types of liquidity we have. You should know we have three types of liquidity we likely consider when treating this topic, which as follows. We want to look at number one. We look at inducement liquidity. Number two, we look at engineering liquidity. Engineering. Number three, we look at equal high/low. All right. Let me put my phone on do not disturb mode. All right. So these are the three types of liquidity I basically teach. Not just teach. This is what you see on your chart. The inducement liquidity is another type of liquidity other traders sees to be a structural liquidity. So sometimes you'll be seeing a lot of traders on social media or on net or anyway talking about structural liquidity. You don't have to be confused. Structural liquidity is an inducement liquidity. Engineering liquidity is just a type of liquidity on its own. Equal high and low is what other traders call sometimes a double top and double bottom liquidity. So you should know this. Now let's look at the inducement, which is structural liquidity. This liquidity is a type or kind of liquidity that you will find. Let's say this is a structure. You want to trade this particular structure, right? You want to trade this particular structure. You have a break of structure at this point. Let's say this is a structure you have on our time frame, on any time frame at all. Now, how do you spot an inducement liquidity? Now let's consider that you want to trade that structure. Now, like I normally said, the first pullback is your liquidity. You identify your liquidity immediately after the first pullback. So now, after breaking this structure, as you can see, after price breaking this structure, it confirms to you that this structure is valid for a buy. All right. So now the first pullback will be your liquidity. All right. So this first pullback coming back is my liquidity. Now, how do we know the type or kind of liquidity it is? You have to wait to see how it reacts after the first pullback, how if price will move to take this high or dance within the range. All right. So now once price moves to take this particular high out like this, it has already confirmed to me and you that this liquidity is an inducement. I don't know why these things are still popping up after even after I place my phone on do not disturb mode. So once this price took out this high, that is giving me a double break of structure, this low automatically becomes my inducement. All right, this low becomes my inducement liquidity. So it is left for you to find out your POI or your point of interest you want to trade from, because having seen that this is my liquidity, I will be waiting for price to come back to take it out. So I will not do anything on chart until price takes this out, because this is confirmed to me as my inducement. So I want to see price comes, take it out like this. So this is inducement liquidity. Take notes. This particular one is inducement liquidity. You have to take note of this. So this is inducement. All right. This is what we call inducement liquidity. Now let's look at the second type of liquidity, engineering liquidity. engineering liquidity. Let me see if I can duplicate this. Let me just draw a new one. All right, let's look at the second concept, engineering liquidity. Let's say we have a structure again. We have a beautiful structure. We now have a break of structure to confirm to us that the structure is okay and valid. Now, how do we know engineering liquidity? Like I normally said, the first pullback is your liquidity. So the first comeback is with liquidity. So now, after the first comeback, since we are looking at engineering liquidity, we don't expect price to take out this high to give us double break of structure. Once price takes out this high to give us double break of structure, it is no longer engineering liquidity, it is an inducement liquidity or structural liquidity. So in engineering liquidity explanation, price is not expected to take out this high. So price should dance within the 50% or 80-70%. So once this is confirmed like this low automatically is confirmed as your engineering liquidity. Take notes. Engineering liquidity. So what I want to see price do is, I want to see price come back, take it out. Come back, take it out. Then that is when you can now find your POI or point of interest where you will buy from at this point. So the main focus is you understanding this liquidity. You want to see price come back to take it out. This is engineering liquidity. I want to make this topic very brief. I want to make this video very short and brief. I don't want it to take longer time than it should. Engineering liquidity. All right, so the last but not the least is equal high and low. All right, so now let's consider equal. You can get equal high and low liquidity from these two structures. All right, so it's just based on logic and understanding. So equal high is very simple. It's very simple. Equal high and low is you having this structure. Let's say you have a structure like this. Now you can either have an engineering liquidity or inducement before you spot out your equal high and low. Let's say you have a particular pullback which is confirmed to be a liquidity, then price took out this high. Price can take this high and it can also stay within the range as well. So you should know this. It's not a must that price should take a high. It's not also a must that price should be within the range. But all your focus is you understanding the high and the low, equal high and the low, how it is being spotted. All right. So now let's say price took out this high and confirms to us a double break of structure again. Remember, it is not a must for price to take out. So now once price took out that high, you already know that this low is your inducement. So now when price comes back, this is where it is very interesting. All right, when price comes back, instead for price to take out this low, you see price dance within this. Sometimes it will dance within this point, then start moving to the upside, or sometimes it stays the same line, then start moving to the upside. Once this is confirmed, this is your equal low liquidity. Are you guys with me? It is not a must that price must take this high. Sometimes price can stay within this low as well, something like this. So it can also be in this form. So this low now becomes your equal low. Then if it happens vice versa, it becomes your equal high. So equal low is for buy. You look out for your opportunity at this low. Now because price, you are waiting for price to come back to take those low out. Price will just do this, and a lot of traders will get into this market. They will start buying from this point, and what price will do? Price will come back, induce them out. Price will use them as engineering liquidity or equal low or equal high liquidity. Price will use them, then move. So this is equal low. First visa of it is equal high. Equal high is for sells. Equal low is for buys. Let me invert it. Look at it here. Look at all of them. You can see all of them now. Even inducement, engineering liquidity, and equal highs now. This is for a sell. When it happens like this, for a sell. If you don't understand, you can watch this video over and over again. This one is equal. Let me tack it. equal low. Like I said, turn it upside down is equal high for a sell. So this is just it. All right, this is just the topic. This is just it. I don't think there's much. All right, can we let's see if we can see stuffs like this on charts. More, it's really taking my time, but it will be taking more time, right? But let's shall see. Okay, I got this beautiful setup. Let's see if I can see something from this setup. Let me see the one I use in this setup. Let's see the one I use in this setup. This go BTC, you can see. Now let's see the one I got in this setup. Now, okay, if you look at it very well now, you see exactly what I explained. Let's go to 3 minutes. It's like 3 minutes will be more clearer. All right, now if you look at it, you see that this particular liquidity I use here is an inducement liquidity, and at the same time we have equal low as well. Look at it. Can you see? This is equal low as well, equal low liquidity, you can see, and we have inducement as well. So two liquidities are just here, equal low and inducement. Now look at it. It's very simple. Look at this structure. Now look at this structure. Let's confirm this structure. Let's say we have this structure, we have a break of structure here. You can see this is a break of structure, then price moved to this point, then price dropped this inducement and broke a structure again. Can you guys see? We have a double break of structure at that point. Let me show you. I know a lot of you will not see it. We have first break of structure at this point, we have second break of structure at this point. You can see a second break of structure at that point. And now what did price do after that second break of structure? You see how price came back, drag many traders into this market from here and started buying, dropping equal low liquidity. A lot of traders will be buying from here expecting price to go higher, and what did price do? Price stop at this point, then come back, took them out, all of them out, and mitigate a point of interest that I got from here, and boom, price started buying. It's as simple as that. This is equal low liquidity and also inducement liquidity that I'm explaining now. I'm explaining two liquidities at the same time, equal low liquidity and inducement liquidity. I'm explaining equal low liquidity and inducement liquidity at the same time from that structure. Now let's find engineering liquidity. Now let's look for engineering liquidity where I can explain that for you. All right, engineering liquidity, let's look for it. All right, I think we can get it from here. Abby, it's not clear. I'm looking for the clearer one, the cleanest one I will use for explanation. All right, now look at this point. Now look at this point. If you look at this point, what can you see? I think you can see that we have a break of structure at this point, something like this. We have a break of structure to the upside. So here we have one break of structure at this point. Look at it. We have only one break of structure here. Now after the break of structure, what happens? You can see that price came back, dropped this low, dropped this particular low, then moved to this point. You see, price didn't take out this high. Price moved to this point, stayed within that point. So immediately this low is now spotted as my engineering liquidity. I'll be waiting for price to come and take it out. So now you can see I marked from this zone. Price came back and picked this zone. You see, so the moment I saw my liquidity and I marked my POI, what happened? Price came back, took out this low, the engineering liquidity, tap on my zone and started buying to the upside. As simple as that. As simple as that. Just one break of structure and you have it. As simple as that. If it is very simple to identify, just go to your chart, you identify all these stuffs. All right, so this actually brought us to the end of this video. Guys. I think I've explained more in details for you guys. All right,